What's up, guys? Welcome to Roensch Capital Charts. In this video, we're going to be doing a deep dive analysis on Google, or more so Alphabet stock, trying to pull out as much bias as we possibly can using a mix of psychological indication, levels, areas that I think we're going to see elevated volume of trading, all right, and pulling out as much bias as we possibly can out of things like the volume profile, the options chain, to get a real grasp of this stock for the entirety of April 2024. Stick around to the end and we'll take a look at the expected move after we look through and get some directional bias here out of everything else that we can. Now, if we start here with GOOG on the 4-hour chart, which I think is kind of like the lowest time frame to look at from a month-to-month perspective, you'll notice that $150 a share has been very much so a level to watch. We actually rejected off of it in early February after dumping through that level off of earnings in late January. And the stock has now managed to reclaim that level, actually treating it now as a support level, a more newfound support level, at least as of the recording of this video. Now, as we head throughout April, okay, on the 4-hour chart in particular, it's going to become increasingly important that not only GOOG hangs on to 150, but I really would love to see that 50 period continue upside and the 50 period itself claim 150. The reason for that is 150 is a psychological level. But if we can have a psychological barrier cross over that psychological level with the stock still above it, all it does is add another downside hang-up. And what that can effectively help to do is put a little bit more doubt in the bears' minds if that does occur, because now there's one more level to get through to crack back downside below 150. So listen, throughout the entire month of April, I'm going to be paying very close attention to both 150 and the 50 period here on the 4-hour chart. Bears, ideally, you'd want to crack back downside below 150. I think ideally before the 50 period crosses over, right? But bears, I think really the best case scenario for you here on the 4-hour is to cross back down below 150, but in addition to that, crack downside below the 50 period and get another scenario where we're bouncing off the 50 period as resistance, because that could open you guys up for a potential downside test of that 200 period, if not lower. Bulls, we want to maintain above that 50 period, right, and above 150, getting that 50 period above 150 itself on an ascending trend. Okay, and that kind of presents somewhat of an open sky setup, at least for now. And by the way, as the month goes on, even if you're watching this in late April, you can kind of follow along and track how things are going. I think that's a great benefit of doing these month-to-month videos. You're likely, in my opinion, at an even greater advantage watching this later in the month of April than you are, you know, in late March or very early April. But let's now move on to the daily chart. Okay, this is the chart that likely has the most eyeballs, okay, on GOOG. Now look, what's great about GOOG heading throughout the month of April is that we're actually on track here to potentially press an all-time high. I mean, as of the recording of this video, the stock is approximately, I mean, we're looking at less than a 3% move away from all-time highs, 2.7% to be specific as of now. Now, when we get to the expected move portion, we'll see just how likely the market is actually looking at that in terms of volatility expectation throughout the next month or so. But a couple of things that I'm paying very close attention to here on the daily, because again, this has the most eyeballs. It's that self-fulfilling prophecy mentality. First of all, that white line, the 50-day moving average, one of, if not the most popular indicator on the most popular time frame on a very popular stock. This chart, this exact chart that we're looking at right now, is one of the most heavily watched charts, I should say, on the planet. So you better believe we're going to see some decision making around these levels. That 50-day, again, currently on the daily, is just below 145 a share. By the end of April, I would love to see that reclaim 145 and really get above 150 with the stock still above 150. Okay, that'll likely require that stock to move higher, to yank that 50 period up above 150 during the month of April. That in and of itself would be a big power move, I think, out of Alphabet here. And that would also give the juice needed to potentially push through an all-time high, which presents a brand new open sky setup. The next level to watch in that case is that psychological round number of 160. Now, bulls and bears also understanding that 155, 155.20 is likely to act as, at least a potential resistance level, as all-time highs tend to do. So I'm keeping an eye on that as well. Now, 150 itself. 150 is a huge psychological level. Okay, so throughout the month of April, I want to see Alphabet become decisive around 150, meaning I want to see this thing pick a direction. Bulls, 150 as a hold is I think imperative for the month of April here on Alphabet. At least for it to be a good month, of course. If we end up battling around 150 for a good majority of the month, it's going to put too much doubt into the heads of, I think, both sides to really lead to much volatility at all. But bulls, I want to see a high volume pull away over the course of multiple days, okay, if not weeks, away from 150. Whereas bears, you guys, same deal. A high volume break downside below 150, back down toward 145, 140. Understanding that 50 period currently sits right around 145 is likely to act as a potential support level on the way down. So take that as you will. Now, the same way that bulls, your best case scenario is a break up on high volume through that all-time high, pulling that 50-day moving average up with you. Bears, your best case scenario throughout the month here is not only cracking downside below 150, also cracking below the 50-day moving average and reclaiming it as a short-term resistance, or more so a mid-term resistance, by a break, retest on lower volume, even if it were to take a couple of days, and then a break downside over the course of a few days on above average volume, heading down toward that 200-day moving average. That would be a big win for the bears. Let's take a quick peek at implied volatility. Currently, IV, if you're trading options, by the way, this is imperative that you understand this. IV right now, compared to the last, 8 months or so, is sitting in, I would say, about the mid-range. Understand the lower IV goes, the more favorable conditions become to purchase contracts, right? And the higher IV goes, the higher the potential risk of IV crush. So that has to be considered into your risk profile, especially if you're trading options, though it can also be utilized to look at the comfort level of the stock according to the traders. Now, before we take a look at the expected move, let's just do a quick volume profile analysis, or let's just take a look at it here on the weekly chart. So you can see here on the weekly, we got a big bounce in early March off of that 50-period moving average on the weekly. Again, each candle represents 1 week. And in terms of volume profile bias, realistically, for the past few weeks here, at least, heading into, or really throughout the time period of late February into the end of March, we have seen volume perhaps a little bit on maybe the slightly above average side, at least compared to the last, 8 months or so. And if we take a look at the movement in the last 4 or 5 weeks, the stock's higher since then. We've had a few red weeks, a few green weeks, but the green weeks have outshined, okay? And listen, just understand, when you have a move in your favor, I always want to see that move occur on as much volume as possible, because that's a big sample size of market participants agreeing with me, okay? Now, we have earnings. Take a look here on April 23rd after the market closes, okay? So that is something to consider here throughout the month of April. Now, the expected move on Alphabet stock through April, okay? The last expiration that we have here in the chain is April 26th. Okay, and if we go over to the expected move on that by close from now until close of April 26th is plus or minus about $12 a share. Now, if we head back to, let's look at this on the daily chart, okay? As of the recording of this video, that tells us that the very real market participants, this is priced by actual traders, right? It's really priced by the implied volatility of each particular expiration date. By the end of April, by the close on April 26th, that puts GOOG at either about 139 a share or at all-time highs at about 163. Now, that's the volatility expectation. Okay, everything else that we just did was to try to pull out as much bias as we could in terms of directional bias, and where we think traders are going to make a lot of decisions, okay? Now, the expected move is, of course, it has no directional bias, but it's a volatility expectation. So, if you're somebody who's like, man, I think Alphabet's going to go sideways throughout the month of April, well, maybe you're someone who looks to capitalize on realized volatility being much lower than expected volatility, and maybe you look to utilize something like an iron condor or something to that degree. Or if you're someone who thinks, I think we're going to be a heck of a lot different than plus or minus $12 a share, and you have a heavy directional bias, well then, as long as you're directionally correct, right, and you're correct in your assumption that realized volatility would be a lot greater than expected volatility, well then that position would benefit greatly from having purchased options. Now, last thing here, options bias. Okay, this is for Google. Okay, I only have the options data for Google. There's no options data, at least with this particular tool on GOOG. Though if you track the options chain day to day on both, they're commonly extremely similar. Now understand that this is the put-call ratio. 1.0 is equal in terms of open interest on puts and calls, and we saw it get as high as 0.9 in late January, and since then it has fallen and currently sits at 0.82, which means that the open interest bias is currently sitting to the call side on Google. Listen, guys, if you got value out of that video, please subscribe to the channel. I greatly appreciate it. And by the way, listen, I'm a guy who over the years, I've made every mistake in the book. I can essentially promise you that if you've made a mistake, I've made it myself. So listen, if your goal is to try to expedite this process, I highly encourage you to check out our Roensch Capital Gold server. I'm in there every single trading day, working with the group, working with my Platinum one-on-one members. That link in the pinned comment, that'll allow you to get grandfathered in at the current rate. Hope to see you join, and I'll see you in the next one.